Hey everybody, we've got some big numbers coming out of the housing market, some big headlines, and headlines making a lot of news. So let's get into the housing market again today. It's Sunday, October 17th, 2021. Thank you for being here. Let's get right into it. We're going to look at the numbers, the data, and my big picture analysis once we get into the numbers here. Okay, we talked about this a few reports ago, but foreclosure starts are up in the US. They jumped 69% after the moratorium ended. The number of homeowners receiving notices to start the repossession process climbed to 7,100 in the United States. That's the biggest number in 8 months. Now, from a historical perspective, a big picture, that's not a very big number. And we're going to talk more about that here in a couple minutes. But this is how things typically get started. We see big jumps like this. It doesn't mean it's going to continue. And we're going to talk about why, because investors and big money are waiting on the sidelines to scoop up these homes. We know that the home ownership rate has been dropping as more companies, corporations, and just investors come in and buy homes for their portfolios. And even CNBC had a headline a few days ago: foreclosures are surging now that the mortgage bailouts are ending. That's another word to call them, right? The moratoriums are mortgage bailouts essentially, but they're still at low levels, yes. But let's take a trip down memory lane here. In the year 2008, about 10 months before the financial meltdown really kicked in, and that was approximately October 2008. And what did we see early in the year of 2008? We saw at that time foreclosures had jumped 75%, and that was early 2008, reporting the numbers from 2007. And you see this article came out January 2008. So this could be the start of something, or it might not be. And here's why: because the banking system is entirely different now than what it was back then. You see, when the housing market started diving back in 2007, 2008, banks were not sure at that time, they were not sure that they were going to get infinite life support. Now the banks have been promised infinite life support. And whatever loans, even bad loans, are given out, they'll know that the money printers or the digitizers of the currency will just come in and buy the portfolio, buy the mortgage-backed securities, inject whatever liquidity is needed from the money printer. So it's a whole different world now financially compared to back then. I know people say, history repeats itself or history rhymes. But there's a lot of things different right now we have to look at within the banking system. So I don't think this is going to be a big turning point. Of course, we're going to continue to keep an eye on the numbers. Well, let's take a look at some more information today. Recent article out of mishtalk.com. Investors rush to buy nearly 1 in 4 homes. And we've been documenting here how the home ownership rate's been dropping. And now here's more evidence that investors are going to be the one buying the home. So it's going to really put a floor under home prices, in my opinion. We're going to talk about home prices here in just a minute. And it gives us a chart right here going back a few years. Nearly 25% now investors are buying homes. That's anywhere from the big mega corporation like BlackRock all the way down to the small time investor with just a few homes in his or her investment portfolio. But what does that mean? Anytime you have investors, even if it's somebody with just a few homes, it's going to be someone that's going to be buying the home and bidding up the price and possibly outbidding someone who wants to buy the home to live in themselves as an owner. The young couple just now looking for their first home, the first time home buyer, are especially going to be in a more difficult position now because of this. And where does it end, right? There's no law that says investors can't buy so many homes. You can have 10,000, 20,000, 50,000, 100,000 homes. You get a mega corporation with access to ultra cheap funds, even access to the Fed window that can go out there and literally scoop up hundreds of thousands of homes, and there's no rules or laws against it. Right? So until some of these things change, some of these laws change, you're going to continue to see, in my opinion, rising home prices. But there's a pretty big supply of homes coming on the market. Let's talk about the end of the moratoriums and how it may impact the supply versus demand equation. And Redfin put this out just recently. We see the median sale price for homes in September was $376,800. That's actually down slightly from the prior month. So home prices dropped from August to September. Now that's pretty much a seasonal drop. Month-to-month drops really don't tell you much because year over year, home prices are still up nationally about 14%. All right, now let's take a look at a number that we really need to keep an eye on. This is the number of homes for sale, and it's about 1.3, just under 1.4 million. So think about that, 1.4 million. Okay, 1.4 million homes for sale. Now let's look at this article that came out on Fortune a few weeks ago, but it talks about, is a supply shock about to hit the housing market? And it's talking again about the end of the foreclosure moratorium, the end of the mortgage bailouts. And it outlines it here out of this article. The number of borrowers in the program is about 1.5 million borrowers that were protected by the program. So add on top of the 1.3, 1.4 million of homes that are currently for sale on the market, and what if another 1.5 million hits the market? Will it be enough to tip the scales, or will investors come in? Will the banks just keep on giving out mortgages for people to come in and buy the homes, no matter how high the prices are? So prices technically don't have to come down, even with the supply jump. Right? As long as there's banks that can loan out endless amounts of money, as long as there's investors with access to ultra cheap rates and no limits on how many homes they can buy, we can just see a further drop in home ownership, but a further rise in home prices. I hope that doesn't happen because it's the little guy that's getting hurt, but it's definitely possible. Right, now let me just read an excerpt out of this, and it's talking about the 1.5 million borrowers that are no longer protected. Quote, at first glance, 1.5 million homes might not sound like a lot considering we're a nation of 80 million homeowners. However, at the most recent count, there are only 1.3 million homes for sale, the number we just talked about, according to NAR. So even if a fraction of those homes currently in forbearance opt to list it, it creates something of a supply shock in the market. And they're calling it a supply shock. Again, we'll have to see how big of a shock it is. Will the shock be a little zap, or will it be an electrocution of the housing market? You let me know down below. I'd like to hear your comments on this. Got to make this a shorter one today. Hope you guys enjoyed the data here and the more brief report that we bring you. Thanks everybody for being here. Stay well, stay safe, stay prepared, keep stacking. Bye for now. Peace.